I'm gonna wait until we start playing on YouTube, then I'll introduce myself. So it's always lagging a little bit behind. Okay, hello everybody, and welcome to IBMF VetNet session. My name is Elvis Avdic, and I work here at the Institute for Veterans and Military Families at the Entrepreneurship Department. And today's our session is on 5 essentials of business finances every entrepreneur should know with Crystal. Before we start, I'm just gonna tell you what IBMF is. IBMF has a bunch of portfolios in entrepreneurship that is focused on helping veterans and military families start and grow their business, transition, and help veterans start and grow their careers. Also, we do a lot of cutting-edge research and community engagement as well. So last year alone, we serviced over 32,000 veterans. If you'd like to learn more about IBMF, please visit us at ibmf.syracuse.edu. So before we start, just some ground rules. Anybody in our session, I would ask you to mute yourself unless you have a question. If you do have a question, please type it in the chat box or ask the presenter. Everybody watching on YouTube out there, please type in your questions in the chat box and I'll make sure the presenter gets it and answer it. I did email you guys handouts for this session. If you don't get it, don't worry, this session will be recorded and I will send the recorded link with the PowerPoint and handout sessions at the end of the presentation. Right now, I would like to pass the speaking engagement to Crystal, and she'll introduce herself and start out the session.
Thanks, Elvis. Hi, everybody. My name is Crystal Wambeck. I am going to be leading you through the 5 essentials of small business bookkeeping over the next hour or so. Thanks for joining me or watching, the recording. I really appreciate you being here. A little bit about me. I am a certified bookkeeper. I've been doing this for 12 years now. I just enjoy bookkeeping, and so I found that I was really, really good at it. Now I really, really like teaching people how to do it. And so I feel like my mission is to help you run your businesses, one balance sheet at a time. So I am a military spouse and an entrepreneur, and so I really have a soft spot in my heart for all things military and all things small business. So if I can ever help you guys with anything, just reach out and let me know. So without further ado, I am going to start the presentation and share my screen with you all. So here we go. Okay, so I like to start out with a little motivational, something or another to get you motivated. I actually got this from one of our instructors at EBVF in Syracuse. So this one that I'm starting off with today says, the best time to plant a tree was 20 years ago. The second best time is now. And I chose this because no matter where you are in your business, if you've been ignoring your books, if you've been avoiding having to deal with your bookkeeping, it was probably best to start at the beginning, but now is the second best time. So I'm glad you're here and you're doing something great for yourself. So why is business bookkeeping so great? Because I know where you guys are at. If you're coming here and you're a little bit frustrated about your books, if you're a little confused about accounting in general, if you are wasting weekends or hours or entire days that you could be working on your business trying to figure this out on your own, you're not alone. I started off somewhere as well. I started off not having a clue about accounting, and I completely understand where you guys are, and I know how to get out of the hole. So that's what we're going to try and do a little bit today. So who this is for, if you have a small business, this is definitely for you. If you are in charge of books at a small business, or any business for that matter, this is for you. Anything business related. So with that said, a couple of ground rules. I really want you guys to get a lot out of this. So mute your cell phones, put Facebook down, shut your office doors, and just hang out with me for the next 45 minutes to an hour, and we will learn a whole bunch of stuff. So I'm not sure if any of you got the handouts, but you can follow along in the handout, and you can put pages in there. You can take notes, and you can write questions down. If you want to email me after this session, you can certainly do that, or you can just type in the question box if you're watching live, and I'll be sure to get to your questions as we go. Okay, so PDF full screen. How do I do that? Elvis, I'm not sure how to make my PDF full screen. So I will just keep going until I figure that out. So what we're going to learn today, this is the 5 essential basics we're going to be going over. We will be learning bookkeeping basics, accounting software. So the bookkeeping basics is just going to be the bird's eye view, the general overview of all things bookkeeping. These are the ground rules that you need to understand and figure out about bookkeeping, what it is, what it's here for, the purpose of it. Hopefully it gives you some clarity on what you need to be doing and why. I'm also going to go over accounting software options. I think in today's technology world, it's so imperative to automate your processes. There are so many options out there, and so I'm going to whittle down the best of the best for you, give you a couple of insights into each different software, and hopefully you can make a better decision for yourself if you don't already have a software. Business budgets, I find this is such an important function of any business that I really, really want to go over this with you guys. If you already have one, great. If you don't, then this will help you. Financial reports, a look at the bottom line. So your financial reports are going to be what you run every month. Reports, it's going to give you the overview of your business financial health in a snapshot form. These are so fun. They are so scary at first, but I'm going to take some of the scare out of this. And then we're going to track it all, what you need to know and what you need to keep for the tax man. This is a burning question by most of the businesses I talk to, so I'm going to go over some of that with you. All right, let's dive in. So let's start off with bookkeeping basics. If you know this already, good for you. If not, here we go. So there are 5 main functions, or tracking functions of your books. There's 5 different buckets of money that each of your transactions will go into. So every time you spend money, every time you make money, every time something happens financially in your books, you will take that transaction. We call it a transaction. You'll take that transaction and you will throw it into a bucket of money. And these are the 5 main buckets you'll be throwing money into. So we'll go over those one by one. First, we're going to start with revenue. Revenue is simply money you earn. This is in the course of your business. You sell something, you provide a service, they pay you. This is what we call revenue. That one's pretty good. That one's pretty simple. Expenses, again, money you spend. You pay the utility bill, you buy your materials for whatever you're selling. These are expenses. Another fancy word accountants like to use is expenditures. It's the same thing if you hear that word. The third bucket of money you guys might be a little less familiar with, but probably heard it in your lifetime somewhere, is assets. These are things you own. If you own a building for your business, if you own a company car, if you have machinery in your shop, computers, furniture, these are all assets. Something people don't really think of is another asset is your checking account. An asset is your savings account. It's your money. So you own money. So that is also considered an asset. The next one, the fourth one, is liabilities. This is what you owe. So you've probably heard this in your personal life and probably in business, but this is an important one. Your liabilities is what you owe to somebody else. So if you have a vendor you owe money to, if you owe money to the bank, if you have a car payment. These are all liabilities. They're called a liability because you're liable to pay them. So the fifth and last one is equity. Equity is your investment or other investments in your company. So if Mr. Wonderful gives you $50,000 for a 10% stake in your company, he now has 10% of equity in your company, and that is going to show up on that line. Now, this is a great big overview, a bird's eye view of how your books function. And there are sub-accounts within each of these. We're not going to dig too far into the sub-accounts, but you do need to be aware of these main accounts. So these accounts, where are they stored? Where do you even find these things? Well, if you're not familiar with it, all of your different transactions are put into these buckets of money that are called accounts, and they are stored in a place we call the chart of accounts. It's a very tricky name. So if you've never seen a chart of accounts, I will show you what that looks like. This looks a little scary. There's a lot of words on here, but don't be alarmed. This is a typical chart of accounts. It's very, very pared down. In this example, yours might be bigger, yours might be smaller, but this is where all of the accounts are housed at. And the reason to have this list is so you can get a sense of organization in your company. So every time you spend money, make money, take out a loan, it will fall under one of these accounts. So if you start at the top, you see your assets. Under account type, this third column, this is where it's going to list those 5 account types that we just went over. So you'll see assets, liabilities, equity, revenue, and expenses. So that's the 5 main types of accounts. In the second column, the column to the left, it says account description. That's more of a sub-account that you will become familiar with as well. So we will go over this list and I'll show you how it's organized. So chart of accounts is always going to be set up the same way. So your chart of accounts is going to have assets on the top, then the liabilities are going to come next. Your equity is third, followed by revenue, and then always your expenses are last. If you look way, way down at the bottom, you're going to see 2 different accounts called other income and other expense. These are accounts that are expenses or revenues to your business, but they weren't earned in the normal course of business. Now, what do I mean by that? I mean, when you have money in a savings account, the bank pays you interest. That's income to you because it's money coming in, but it's not revenue because you didn't earn it doing what your business does. You didn't sell a t-shirt and earn interest income. So you can't really put it in your regular revenue bucket. It wouldn't make sense there, and it would really throw off all of your numbers. Same with the other expenses. If you have interest expense, yeah, in a technical sense, it took you that interest to buy the loan, to buy the materials, to earn the revenue, but at the same time, it's not a regular expense, meaning you didn't need that interest expense to function your business. So they're considered others. So this is a very quick overview. So I will go a little bit over the account description here. So the bank accounts you're going to see are very first, always come first every time I've ever seen them. So that's because that's kind of the most important part of any business is, your cash on hand. And then it's going to flow through an accounts receivable. Accounts receivable is money due from your customers. So when you send them an invoice and they haven't paid you yet, that is money you have yet to receive. So it's an accounts receivable. And you'll notice that that's an asset. That's because technically you own the money they owe you. You can bank on it. You're probably going to be receiving that money unless something crazy happens, and they fold and they don't pay you. But that's a whole different lesson. So for this example, we'll just assume they will make good on their debt and you'll get that money. So we can go ahead and consider it an asset before you receive it. So right underneath of that, you're going to see something called bad debts. This would be where you categorize any money you don't think you're going to be receiving. Again, that's a little bit more advanced, and I can definitely help you figure that out if you think you have bad debts, but usually this is not anything people use on a normal basis, or a regular basis, I should say. So the last asset there on the list is inventory. This is inventory you've purchased and you're selling. Either you're selling it, whole, or it's part of what you use to make your product or services. So any inventory you have on hand. Liabilities, there's two different kinds here: accounts payable and credit cards. So accounts payable, again, is what you owe to vendors, and a credit card is showing up as a liability because it's essentially just a revolving loan. If this pretend company had any loans from the bank, it would show up under these liabilities as well. Or a car loan, convertible notes to investors, that kind of stuff are all liabilities. So you'd see those there. The equity section, owner's equity, there are no investors and just one owner, so it's showing up as just one owner's equity. The revenue is very cut and dry, and the expenses are very cut and dry. Membership fees, office expenses, dues and subscriptions, these are pretty self-explanatory. Now, when you guys are setting up your own chart of accounts, I highly recommend you make it as simple and as organized as you can, but make sure that it pertains to your company. If you don't have payroll expense or you don't have rent expense, there's no reason for it to be showing up on your chart of accounts. But if you have something weird, like, whatever the case may be, then go ahead and add it in. If you like to keep track of how much you're spending on online software subscriptions, like Trello and Zapier or MailChimp or whatever software you're subscribing to, go ahead and put that under its own category. It just all depends on how you want to run things, but just make sure it's working for you and you're seeing information that makes sense on this chart of accounts. So that is kind of your bird's eye view of how your books function. So I'll just recap a little bit just so you are completely clear on how this works. So every time you have a financial transaction, you have to throw it into a bucket of money, and that bucket of money is going to be used on your report. So those accounts that you see in this chart of accounts, they are going to be used for all your financial reporting. The reports will take from this account type and organize it into a digestible report that you can see. So let's move on to software. I'm not sure if you guys have an accounting software or not. If you don't, I highly recommend you do. I feel like software can be intimidating to people because they think, oh, my business isn't big enough, or I don't know what I'm doing, so I'm not going to use the software. But don't be scared of it. I really think that once you get the hang of it, it's so much easier, and it takes so much stress off of your life to automate your processes. And really, once you understand the basics of accounting and how things are supposed to function, those general rules do not change. The only thing that changes is how your software developer has created the software. So you have to figure out how the software works. But once you have the understanding of accounting and what needs to happen, you can fumble through and figure out the software. You're not going to break it. Everything can be fixed. Nothing is the end of the world. And so don't be scared of this software. So yeah, life's too short to keep paper books, everybody. Here's a little trivia for you. I'm sure you all know this, but it's called bookkeeping because way back in the day, before computers, people have had businesses since the beginning of time, and they've always kept track of their finances. And so, back in the day, before computers, they had these giant ledger books. I'm sure you've seen them. You can still actually buy ledger books in office supply stores. They're just paper books. And even though it's software now and a spreadsheet, we still call them the books. So there's many, many choices. Like I said, there's so many choices, it can probably become a little overwhelming. Software is usually quite affordable, usually just about $15 a month. It can be more if you do payroll service, but again, highly recommend doing it, whatever you need for your business. It's efficient and it's very, very helpful. There's a lot of times the software will definitely be a crutch for you if you're fumbling a little bit with what to do. So here's another quote for you. When everything seems to be going against you, remember that an airplane takes off against the wind, not with it. So it may seem difficult to learn how to run your books, the software, but eventually, it'll be much easier than what you're doing now. So here are a few industry standards. There's only 4 here. These are the 4 that I personally recommend you look into. If you find others that you like, great, but we're just going to talk about these right now. So these function fairly differently from each other. Definitely recommend you get YouTube tutorials or kind of an overview. Each of these companies has YouTube videos. They show you how their software functions, if it looks like something that you like, if you like the looks of it, how it works, what the buttons are like, what the screens are like, then that's important. If you can't figure out what the buttons are, then maybe check out a different one. So we will start in the bottom right corner. We're going to start with FreshBooks. This is a software that is really extraordinary for invoicing. If a big majority of your business focuses around invoicing, this is a great one. It's got a time tracking system right within it. In fact, I know people who have a FreshBooks account solely for the invoicing feature, and then they have a whole separate accounting software, which is funny to me. So that tells you how great the invoicing is. Next, we're going to talk about Xero, and we're going to talk about Wave. We're going to talk about these two together because they function a lot alike. Wave is free. Xero is paid. Xero is great. It's a robust system. It's got some reporting for you. It doesn't have a ton of reports. It does the basics. It's going to do just what you need. It's not going to be anything crazy. So if reporting is super important to you, and we'll get to that in a little while, if big and bad reports are important to you, you're not going to want to choose Xero. They're a little limited. So with that, the learning curve on this software for me, because I grew up with a company that used QuickBooks, to go from QuickBooks to Xero, honestly, you guys, I had a bit of a learning curve with that. I actually had to watch the tutorials because these two, the Wave and the Xero softwares, they function much differently than QuickBooks. But once you learn it, it's a breeze, not a problem. So Wave is really great, very limited reporting, limited functions if you need to do crazy complicated accounting stuff. But Wave is free. And what I really like about Wave is it doesn't do anything crazy. It is a simple accounting platform. It gets the job done. And the best part about Wave is it has a personal side. So within your business books, with a click of a button, you can click over to your personal finances and you can manage them all there. You can link your personal bank accounts to there. You can do the bank feed the same. And what is so neat about Wave is if you draw money out of your business account, it will automatically transfer to your personal account with a push of a button. Or if you're spending money in your personal accounts for the business, from your personal side, with a click of a button, it'll tell the books that it was a business expense. So you don't have to go in and do expense reports and all that stuff. If you don't want to be reimbursed, it just tracks it right there in the books. Super, super easy. So those are the functions that I really like about Wave. Xero does not have a personal side. But again, it's a little more robust, a little more grown up because of all of the features it can handle and the reporting. So those are the first 3. And then of course, everybody's heard of QuickBooks. They have made themselves just, almost the industry standard. Everybody just automatically thinks QuickBooks when you think of, accounting software. They have two different types of software. One is a desktop software, and one is an online cloud-based software. So we'll start with the online-based cloud software. This is a great tool, a great function. If you've grown up on QuickBooks, you know exactly how it works. Reporting is really, really good in this online software. Much more robust than the other ones, a lot more features, a lot more detailed reports if that kind of stuff is important to you. The bank feeds work great, everything is good. So QuickBooks just came out with a new feature. They have a lot of integrations, a lot of third-party softwares integrate with QuickBooks, and they have, I think it's got to be almost an exclusive partner deal with Bill.com. If you guys automate your expenses through Bill.com, there is a new feature within QuickBooks Online where you can pay your bills through Bill.com from inside your QuickBooks Online software. So it's just crazy mind-blowing technology where with the click of a button, you can just, bam, pay your bills. It's awesome. So then the desktop version is like the mother of all accounting platforms for businesses and end users. It's the easiest of all desktop softwares because they get so robust and so complicated that a lot of times a desktop software is going to be geared more towards your CPA firms or your bookkeeping firms. But that being said, don't be scared of desktop software. Desktop software, it lacks mobility. It's on the one computer that you load it on. So that's the downfall, but you don't need an internet connection if you don't have multiple people working on your books or you don't need to take them on the go. A desktop software is always a great option. You can do a lot more inventory stuff. If you have complicated inventory or works in progress, I would highly recommend a desktop software. Your cloud software is not going to give you the inventory management that you're going to need. You may need a third-party software to help you with that. Again, all personal preference. So again, FreshBooks, mostly for really great invoicing and time tracking. Xero and Wave, your basics, limited reporting, but get the job done. And QuickBooks has a lot of integrations for third-party softwares. So those are kind of the high points of all of those. All right, so
Hi, Crystal.
Hi, Elvis.
Michael has a question.
Yes.
If you check the chat box.
Okay, I am actually in full screen, so I will try and do that. Okay, are all of these cloud-based or can I purchase a hard copy? Okay, so in terms of cloud-based software, a cloud-based software you're not going to be able to load. That's kind of a downfall of a cloud-based software. You have to pay them a monthly fee or an annual fee kind of forever. It's a subscription, and so you don't ever own it. A desktop software, you buy the license and you own it forever. Eventually, that company will stop servicing and updating the desktop software, but you'll still own it forever. So you cannot actually download a hard copy to install on your system. QuickBooks has an app you can download, which is almost the same thing, but all of your information is going to be stored in their servers on the cloud. You know, your information isn't going to be hard stored on your computer. You can download your information, I think, in kind of like a PDF version, but you will never have the hard copies of your information. This is nice because computers crash, and so when your computer crashes, your information is still safe. But only the desktop versions can you do that with. Can you have them hard locked on your computer? And then okay, so can one be considered more secure than the other? The last thing you want is to have customers' financial data hacked. Absolutely. Oh my gosh, security is like of the utmost importance to everybody. So the security is through the server. So QuickBooks has their own security team. It's on their cloud. They're in charge of securing it. And so just like Target, just like MasterCard, just like Sony, everything is hackable. And unfortunately, so is your computer, you know? So everything is hackable. But what's not going to happen is your customer's information isn't going to be shared, used by the cloud-based software. You know, Xero is not going to come in and see who your customers are and, you know, use that information. That's not how that works. There's privacy with all of that. But in terms of hacking, I think living in the woods without a cell phone is the only way to not get hacked, although I'm not even sure about that anymore. So just be careful, but all of these are top-rated, highly secure companies. I say trust them. I haven't heard anything different. Is there any more questions about software I can answer? Those were really good questions. Thank you, Michael. Hope I answered them for you. Okay, so let's keep going. Let's talk a little bit about budgets. I'm not sure how many of you out there have a budget, but you should. You should definitely have a budget, even if it's kind of like a back of the envelope, sitting in an airport lobby, trying to scratch out your sales goals type of situation. Just do so. There's all these fancy words like budgets and cash flows and projections, and all that means, you guys, is just try and figure out what's going to happen and what you need to just survive. It's so astounding when you finally break down numbers and what you need to run your business, what you need to make day to day to keep the lights on, and what your sales goals should be. When you start doing some math, it's usually astounding, like, oh my gosh, I needed to make way more than I thought just to keep the lights on, or you know, or like, oh my gosh, I'm killing it. You know, this is awesome. Can give myself a raise. So doing a checkbook balance budget, I mean, it's fine. I know people who are like, well, I mean, I'm successful. I've got money in the bank. You know, I've got enough to cover my bills. Like, oh my gosh, I needed to make way more than I thought just to keep the lights on. So I recommend just doing a budget. Just keep a budget. Just keep a running tally of what's happening and where you need to be, so you don't get caught off guard. So we are going to talk a little bit about budgets. So again, cash flows and budgets, it's just predicting what may or may not happen. There is no perfect way to do a budget, so don't get lost in the details. It doesn't have to be beautiful. It doesn't have to be 100% spot on. Budgets are 85% best guess. You can never predict what's going to be happening, but you can prepare for what might happen. That's the purpose of a budget, is to cover yourself for anything. So you don't get caught in a situation you don't like. And like I said, back of the envelope is fine. You don't have to have a budgeting software. You don't have to hire someone with a whole bunch of letters behind their name to do this for you. Just go for it. I will explain to you how to do that. So the essential basics of a budget: money in, money out, what's left. And so these are the core principles behind any budget. I start with money out because you know what you're going to spend. You know exactly how much your software costs you. You know exactly how much your insurance costs you. Your car payment happens every single month. Rent happens every single month. Take those, write them down, and don't leave out the stuff that doesn't seem important or you just write off because it's a small amount. Those small amounts really add up and they can eat into your profits if you're not catching them right away. So things that get left out of a budget and it kind of bite people at the end of the day is going to be stuff like interest. I mean, if you take out a $10,000 loan and it's paid back over the course of however long, it doesn't matter, interest expense, that adds up. It could be $50 a month, it could be $300 a month, or higher, $1,000 a month on just interest, depending on what your business is and what kind of loan you took out. But these expenses are sometimes quite substantial. So make sure to write down interest, no matter how big it is. So interest expense gets forgotten. So one thing that I see a lot in my own budget is I have groups that I belong to, like the Chamber of Commerce and a couple of different social networking groups that I, do during the month, like accountant groups. Well, we have meetings, and these meetings happen at restaurants. And so I have to consciously make sure to budget for those meals, because $30, $70, $200 a month on meals, at the time, swiping your card for 15, 20 bucks doesn't seem like that big a deal. But when it comes time to pay yourself profits at the end of the quarter, you're like, hey, where'd my 300 bucks go? That's right, tell the restaurant. So put it in your budget so you can plan for it. Those are some pretty forgotten things. I'm sure you guys are thinking on the top of your head that you've got lots of other types of situations that you could easily just forget, but write everything down in terms of expenses. I have fees written down because this is the third one. Bear with me. A fee. So bank fees, PayPal fees, merchant account fees. If you guys have a Stripe account, if you take and collect money from your invoices online, so I've got a QuickBooks subscription and my customers pay my invoices through there. QuickBooks takes a cut when they process payments. And so those amounts can add up real fast if you're not prepared for them. So make sure any of your bank fees along with your interest are, calculated. So then once I get all of my expenses figured out, I like to figure out what I'm gonna have coming in. So this can be a wild shot in the dark. People get really lost here and they think this is impossible. I don't have a clue what people are gonna pay me. This is a great time to do sales goals. This is a great time to say, well, in June, I have X dollars going out, which means I need that money plus more coming in. So sales goals, figure out how you're going to get there. This is a great time to think, hey, self, maybe we should raise our prices, or hey, partners and staff, we should sell a little bit more, or how are we going to get more people in the door? Sales goals. This budgeting can lead to just a complete business process overhaul. It can change the way you do business completely. It can inspire you to find new streams of revenue. It can inspire you to make your processing more efficient, cut your costs of goods sold down. So this is such a good exercise because it calls into question everything you do and makes you prepare for it. Because if you find out you have to have a new type of insurance on your building, or another regulation came out, now you owe the state $1,000 this year that you didn't plan for. If you're budgeting and you're stocking money away for a rainy day in a MAD account for your business, these types of things can be overcome, and you know exactly how you're going to make the revenue, how you can cut expenses, and how you can make it work. So that being said, a lot of people ask me for a budgeting template, and so I made one for you all. You can go to my website, crystalwambeck.com, and there's a button that says free budget template. Click on it, download the budget template. It's in an Excel format, and you can add or subtract lines as you need, but it gives you just a general overview of how a budget can be set up with some formulas in there for you. So you can see your bottom line and your projections, and you can see where you need to be sitting for your revenue goals and cutting some expenses. So I hope you find that very useful. Give me a shout out if you download it and you like it. So that being said, so I hope everybody understood the budget portion. So like I said, adjusting your budget, the important thing is to make your business work. This just brings into focus all things about your business. If your budget shows you in the red, you can cut expenses again, raise your prices, find new streams of revenue, all the things we went over. So yes, that's budget. I just love budgeting. It just is all things good business. So without further ado, we talked a little bit about financial reports when we were talking about the different accounts and the different charts of accounts. These financial reports are terrifying to most people. I know I was absolutely terrified of them. There are so many numbers, there's so many lines and subtotals, and it's just mind-numbing. when you first start getting used to financial reports. So I totally get it if these make you feel like you're lost. But once you dive in, you're like, it'll click. It'll be like, okay, holy cow, that makes sense. So hopefully I will shed some light on these financial reports for you today so you're not so scared of these. So the two financial reports that I think are the most important that I really want you guys to know is the balance sheet and the income statement. The income statement can also be called your profit and loss. So I'm not sure if you've heard these terms before, if you've heard one but not the other. They're used interchangeably. The balance sheet's also called the statement of financial position. A lot of accountant types or bankers will use the formal statement of financial position, but they mean the balance sheet. So we're going to go over both of these. There are many, many, many other financial reports. Literally, the sky's the limit, because then every financial report can be customized and it makes it a new report. So there is no end to how many financial reports there are. These are the foundations. If you get these two down, the rest will follow. You will get curious. You will think, hey, I've got that number, but now I wonder what that means. I wonder if I can see this information. You can. You can see anything you want. So let's dive in and get you knowledge on these foundation reports. We'll start with the income statement. And again, this is also called the profit and loss report, okay? I have a quote by Yoda, if there's any Star Wars fans. It's a 40th anniversary today. So do or do not. There is no try. So fitting when it comes to figuring out your income statement. This is the funnest report, you guys. Once you figure this out, you're going to just love running this report. Especially when the numbers are black, you're going to love running it. So this is organized in two ways. The whole purpose of the income statement is to tell you what your profit or your loss is, hence the name profit and loss report. This is going to tell you what you earned, what you spent, and what was left. Simple as that. Revenue is on the top, expenses are on the bottom, and it subtracts the two numbers so you can see what's left over. So this is a lot like a budget, but this is what really happened. So this is where your infamous bottom line comes in at. And I prepared a mock-up of an income statement for you guys. So this is for a company I created. It's called Widget World. I know it's a very exciting business where they sell widgets. So an income statement can be run for any period. You can run it for yesterday. You can run it for last week, last quarter. It doesn't matter. Whatever you want, whatever time frame you want to see what your profit was. So if you've got a sales promotion going on for 2 months, run the profit and loss for those 2 months and see how it did. So that being said, the normal amount of time people run this for is the prior month. It's just kind of what you do at the end of the month, check in, see what you did last month, see where you can tweak and make changes if you need to. Or, you know, clap and pat yourself on the back. So you'll see at the top here is the income. That's the revenue portion. It's going to say different types of revenue they had. They made $79,000 in revenue. So cost of goods sold, we kind of didn't touch on this before when we were talking about the buckets of money. This is an expense, but this is a special type of expense. These cost of goods sold, if you're not familiar, are the things that it takes to make your product or service. So Widget World sells widgets, but it takes materials to make their widgets that they then sell. So the materials to make the widgets are called cost of goods sold. Right off the top, you couldn't sell that money or sell those products without buying the materials to make the products. And so they're treated a little bit special. So right off the top, we take out that cost of goods sold. So what did it cost us to make those widgets? At the end, we call it a gross profit. So the end of the day, what we earned, what it cost us to earn, what's left, it's $46,900. That $46,900 is now what we have to spend on the rest of our bills. So that includes advertising, meals and entertainment, wages. Everything you see in that expenses section has to come out of that $46,900. And so you'll see that wages takes a whole chunk because it takes a lot of people to put widgets together. And it takes a lot of travel and probably for the salesman to sell those widgets. So all of our expenses added up was just over 40K. So when we take 40K out of 46K, we have a net profit of $6,302. So our bottom line is just over $6,000, and it's black, so it means it was a net profit. If the expenses were more than the gross profit, you would see there would be a net loss because we would have spent more than we made. Give me a shout out if any of this is confusing. So this is your income statement, also called your profit and loss statement. All it's going to do is show you your revenue, your expenses, and what's left after all of them. So again, this is one of my favorite reports. You're going to love running it once you get your books done. And especially if you're in the black. That's always fun. Okay, so that was the income statement. Here is the balance sheet. So the balance sheet is a little bit different of a concept. The balance sheet is going to tell you the balances of all of the other accounts. So in this income statement, we saw income and we saw expenses. We didn't see any liabilities. We didn't see any loan payments. We didn't see equity. And we don't see any assets on here, right? We just see the money moving. The balance sheet is where the rest of it comes in at. The balance sheet is what's going to show you a snapshot. It's a statement of financial position, meaning at the end of, we'll say last month, April 31st, we're going to run a balance sheet, and it is going to show us the ending balances of all of our accounts as of that day. So as of April 31st, it's going to show us our bank balance. It's going to show us how many liabilities we have outstanding, how many investors we have, and what their equity balances are. It's going to show us our credit card balances as of that date. So it's a snapshot of what our balances were in those accounts. So without hesitation, here is a balance sheet example. So again, this is for Widget World as of the end of last year. It's going to have the same type of organization as the chart of accounts, actually. So you'll see these show up in the same order. Assets are going to come first, then liabilities, and then equity. So assets are on top. So you'll see here it's going to show us all of our bank accounts and our accounts receivable. This is also going to show us our fixed assets. We've got equipment and buildings and land, and then we've got inventory on hand. It's going to show us exactly how much all of that was valued at as of December 31st. So add it all up, it's $124,000. So scrolling down, the next section we see is liabilities. This is our credit cards, accounts payable, and our loans that we have due. So you'll see we have a bank loan for operating capital, and then we've got a building and land loan. And you'll see we must have just bought that building and land because the value is exactly worth the loan, so we haven't paid any off on that loan yet. So net assets, this total right here, this $28,000, that is your net assets. Your assets less your liabilities. Now, why is this important? So this is important because your investors and your banker and you are going to need to know if you have enough cash in the bank to pay your bills. So at the very top, you saw the assets were anything convertible to cash, right? Your checking account, your savings account. Customer payments you have to receive, buildings you can sell, equipment you can sell, inventory you can sell. You can convert every single bit of those things to cash. And an investor wants to see, can you sell enough stuff to pay your bills? So you have $124,000 worth of stuff you can convert to cash, and you owe $96,000, which means you have a net asset, which is a surplus of assets to liabilities of $28,000. This looks very, very good to investors, to bankers, to partners, to yourself, that, yep, you are pretty solvent at this point, because if today you needed to, you could sell everything you own, make good on your debts, and still be fine. So that is one of the very, very important parts of a balance sheet. So the bottom part is equity. Equity is a good snapshot if your investors are like, hey, you know, what is my equity worth in your company? What are you showing? It's there. You're not really going to do much with this on a regular basis. It's just shown here on the balance sheet. So you'll see total equity. This is some advanced accounting stuff, but your net assets up here, your assets less liabilities, need to equal your equity. And when you have a software, it does. It's really nice. If you're trying to do a paper ledger, you'll have to do math and make sure that these all balance. But when you have a software, it does all the background stuff for you. So you automate this process and you don't ever have to worry that they don't balance. So it's so nice. So that is financial reporting. And like I said, you guys will definitely find more reports as you go and as you grow and as you learn what other reports would be useful to you. There's just so many, and not all of them pertain to every business, but I did want you guys to be aware of those too. Okay, the cash statement is it's a little bit more complicated than the balance sheet, but yes, it's going to convert everything into cash. It's gonna basically tell you your cash flow, everything you've spent in terms of cash. It's a little bit different, but yeah, essentially the same type of theory behind the cash statement. That one again is a little more advanced than we're going to go into, but I can definitely help you with that. There's a lot of YouTube videos on the cash statements. But yeah, great question. All right, so last but not least, I wanted to leave you guys with some helpful information. I know we just got through tax time, and I'm not sure if you guys have started your companies, if you've had to do a tax return yet, but I know this is a big source of confusion for people too. What do I need for the taxes? What's happening? What are they going to need? So I want you to rest assured that if you go to a CPA to get your taxes done, I promise you every single CPA is the same way. They will hand you a packet of stuff you have to fill out. So they will tell you exactly what they need. Each CPA has a core standard of stuff. Some are a little bit different, but it's all the same stuff, and they'll tell you exactly what you need. But the first and foremost, get your books caught up. Have that software. It is so vital to tax time. Just imagine just printing a couple reports at the end of the year and then literally emailing them to your CPA. Tax time could actually be that easy for you. So this bookkeeping stuff is so important. Tax time doesn't have to suck. I cannot help you with the bills. I can't help you pay the taxes, but these will hopefully help you out a little bit. Okay. Yeah, if you need help, ask. There's no reason to struggle. So let me go back though. Okay, so your tax person is going to need that income statement in your balance sheet. And they're going to need this because that shows your income. You have to pay taxes on that income. The federal government requires it, and your state probably does too. I think there's maybe 5 or 8 states that don't have state income taxes. If you live in one, good for you. If you don't, I feel your pain. So the tax man is going to want his money, and it's going to be based on every single penny you pull in. Okay, so track your revenue. Make sure you track it all. They'll find out if you don't. Your customers have to send in tax forms saying what they paid you, and so they'll know if you're not claiming it. So don't skirt the tax man. It's easier to just pay him, even though it is not fun. What else they're going to need is they're going to need copies of receipts. They're going to need copies of receipts for charitable donations. Definitely keep those receipts. I recommend you keep receipts. You don't necessarily have to scan all of your receipts and upload them. So your software, okay, you're going to find in each of these softwares, there is the ability to scan your receipt and attach it to each electronic transaction. It is amazing. So you don't necessarily have to do that, but you do have to keep your receipts. The receipts are important for an audit. Your CPA doesn't necessarily need them, all of them anyway. The big ones, they probably do. But the smaller receipts are kept in case of an audit. If you can't substantiate your expense, they probably won't allow the deduction. And what that means is, unless you have a receipt saying you spent it and what you spent it on, they're not going to let you take that as a deduction, and you're going to owe them that money back. So keep your receipts for 7 years is the audit. Okay, great question. So yes, quarterly taxes is a super important thing for entrepreneurs. This gets kind of overlooked and kind of gets people. So these quarterly taxes are an estimate on what you're earning. So if you pay your income taxes to the federal government and the state quarterly, it really lessens that load. In fact, I really think that some states require you to pay quarterly. So there's a form online, and there's instructions on both the IRS and your state website how to fill out the quarterly tax report. It'll just be a formula. What did you make? What did you spend? You know, here's the rate, multiply it, send this amount in. So you guys be sure you're paying those quarterly taxes. Thank you, Stacy. So we are in quarter 2 right now, and it will end in June. So July 15th, I do believe, is the next quarterly tax due. So make sure you guys are getting that done. And if you do not want to use a CPA, because they are very expensive, they should be expensive. They had to go to college for a very long time, and they can get you out of a jam if you do your taxes wrong. They can be that second set of eyes. If you're comfortable doing your own taxes, by all means, I can't tell you what you should or shouldn't do. There is a bunch of software out there that is, you know, TurboTax, H&R Block even has their own software. If you feel comfortable doing your own taxes, by all means. If you don't, find a CPA you like. There's no right way. You don't have to be a tax preparer to submit your own taxes. That's the nice part about it. And really, the tax code, I guess, is being reformed right now. So, hey, you never know. We may be going to like a postcard tax return. That would be nice, wouldn't it? But yes, you can get by without a CPA. So even if you're not going to use a CPA, you still have to have this information for your taxes, because that software is going to ask you for this information. So make sure you have it, and make sure you're keeping those receipts for an audit. That's my advice. So the stuff you need to keep is still the same. Your income statement, your balance sheet, the taxes are going to have lines for those on there. You just fill in the numbers if it's in a software. Any charitable donations, cost of goods sold is important to be separated out if that's on your taxes. So that is my suggestion for taxes. Thanks. All right. So I'm going to bring the presentation to a close. You guys, I could talk to you about bookkeeping all day. There's so much to go on, but I know you have lives to get back to. So my advice as a certified bookkeeper, as an entrepreneur, as someone who started somewhere, if you need help, ask. We don't do things, you know, magically on our own. It takes a village. There's no reason to struggle. Everyone learns everything from someone. I mean, at one point, I didn't have a clue about accounting. 12 years ago, I had a really great person show me the ropes, and I learned somewhere too. So it can be done. You know, I almost failed high school accounting. And so if you would have told me back then that I was going to be teaching bookkeeping to you guys, I'd have laughed. So once you learn how to talk the talk, you know, everyone's going to be like, oh my gosh, they're awesome. So I hope that I was able to provide some helpful insights to you guys. Thank you, Sharon. And so, oh yeah, June 15th. Okay, thank you, Stacy. Yes, so June 15th is the next quarterly date. So the way to get started is to quit talking and begin doing. So I hope you guys go out and you get some software and you link up those bank feeds and you get your books done. And if you need help, I'm just a call away. So thank you guys so very much for all of your attention and your questions. It's been great hanging out with you today. So I want everyone to have a great day.
Okay, guys, if you have any questions, we'll have a few minutes for Crystal.
Yeah.
And please ask right now, and she'll be happy to answer it. So we'll go a few minutes and make sure
Okay.
if anybody doesn't have any questions, then I'll guess thank you all
Great.
for joining us and tune
Yeah.
in for our next VetNet.
Thanks, guys. Thanks, Stacy, Michael, and Lisa. Appreciate it. And Paris.
Okay, anybody in a live session? Anybody has any questions? Okay, I guess not. I guess
Okay, great.
we'll end the session and I'll send everybody the PowerPoint slides and the handout session as well with the recorded
Sounds
link.
great. So just to let everybody know, my website is crystalwambeck.com. I have a lot of awesome information on there. My phone number, you can direct email me there. Yep, stay tuned for updates and ask anything you need. I'm here for you guys. Thank you.
Thank you all.